Welcome back. Now, this is the final segment of the show, our market analysis, where Sandiswa Dlamini, Treasury Dealer at Nedbank, joins me in studio. Very good afternoon, and thank you so much for coming through. I'd like to start off locally, well, in South Africa specifically. We have a financial actions task force that grey-listed South Africa back in 2023. Let's, 2 years or 3 years later on, any hopes for SA being removed from the grey list? What would markets or investors actually make of this?
Good afternoon, Natsile, and good afternoon to your viewers. As you have just said, there is a big meeting currently happening with the Financial Actions Task Force, and this is to review a decision that they made in 2023 where they grey-listed South Africa. Just the reasons behind that, it had a lot in money laundering speculations with the financial system in South Africa not being regulated hard enough, or the institute not seeing a lot of prosecutions for complex crimes. So complex crimes comes from a lot of money laundering, and it can be terrorist financing, and this caused a lot of issues for SA previously. But the lack in that is that this institute produced an action plan, which they gave to the country to sort out their issues. So currently what we are seeing is that the market is a bit optimistic that the outcome will be for South Africa to be removed from that grey list. But we are still yet to see, because they have shown that they have acted on those action points. They are now trying to prosecute these crimes, and they have put in some acts or legislature to try to avert money laundering in the country. But there's still a lot to be seen from this move, and the meeting ends on Friday, so that's when we are going to find out the outcome of this meeting. And this have a lot of implications for South Africa. Since 2023, this was sort of a bad time for South Africa, because investors coming out from Europe, from the US, trying to invest in the country, they get worried if the country is grey-listed, because this means that there is a lot that's not being regulated properly in the space. So that's why it would be good news for South Africa to be removed, and we are yet to see if that happens this week or it's some other time in the next cycle. So currently, the market is trading a bit cautious, especially when it comes to the rand against the US dollar, against the euro and GBP, and mostly it's depreciating because the dealers and the traders are currently waiting for this outcome and trading cautiously, making sure that they don't overextend their positions. And when the outcome comes, it's disappointing. So we are currently at 17.44 for the US dollar against rand, euro. This is a slight depreciation, but it's been a 0.44%. It's not that bad, but it's just that it just shows the caution in the market to this news. And the other part, especially that's contributing to the rand, it's the price of gold. The price of gold have just dropped, not by big margins, but the slight drop is mostly coming from investors and traders taking out their profits from these trades, from holding gold. So on Monday, gold was trading at a record high of 4,378. Currently, it's at 4,144. So this drop, it's indicative of traders making profits and taking that profit out of the market.
May I ask, Sendiswa, what would it take for us to probably see a spike when it comes to gold? Because it's been performing relatively well until Monday, of course.
So that's a good question. So gold, fortunately or unfortunately, is always seen as a safe haven for investors. So when there's a lot of uncertainty in the market, or there's a lot of tensions coming around the world, investors would prefer to hold gold than stocks, because stocks are perceived as risky investments. So most investors will move towards gold. So during times where there are tensions, let's say we are having tensions for war in the Middle East, Ukraine, the tensions are ramping up, you'll see the price of gold going higher. And we've seen gold performing quite well since Trump took office. And that's also because of the unpredictability of Donald Trump in terms of his policies and his is the implementation of those policies. So there's a lot of uncertainty that comes with a character like the President of the United States, which means you're always on edge. So rather than being on edge, investors prefer to hold gold. But unfortunately, or fortunately, currently we are saying that the tensions in the Middle East are starting to ease down. That's why the prices of gold are starting now to go down a bit. But most market analysts view this as a correction rather than a breakdown of the price of gold. It's just a correction for the meantime. The price of gold is expected to continue to rise, especially this is from researchers by JP Morgan and IMF. They are predicting that gold will continue to go to 5,000 in the next few months.
Right. Before we get to how equities are looking, I'd like to just get your perspective on this. What's your assessment of the current relationship between China and the U.S.? The latest headline is that tariffs on China might actually go above 100%. And we have seen a reduction in terms of China's exports, in terms of trade with the U.S. What do you make of whatever's happening between China and the U.S. right now?
Yes. So when it comes to China and the U.S., the relationship there is not really in a good space. And I think ever since the conversation around tariffs, and some would say even by the president of the United States coming to office, he never had a good relationship with China, or have always viewed China as an enemy or as a big competitor, and they've always gone at each other with tariffs or with taxes. So these new developments is bringing a bit of tension in the market, but it's not a surprise. It's something that most market participants expect. And this one was a surprise only because of the announcement made by China, which the U.S. did not expect, especially with the minerals exports.
Yes.
So them putting restriction was a move that the U.S. did not expect, and that's why the reaction from Donald Trump was the 100% tariff, which was also a bit too high. But there are currently ongoing conversations or trade negotiations between the two countries. We hope that this will lead to a finalization of a trade deal between the two countries, which will then stabilize the market, and we will not see a lot of spikes as we currently do. But with the current administration in the U.S., I think you can expect spikes and some big movements, especially when there's an announcement being made and a reaction to an announcement made by China or the U.S.
Right. We're going to wrap it up in a minute, but I'd like for you to give us your observation or analysis of equities.
Yes, so on equities, we've seen Apple reaching record highs on Monday, and this is because of their sales ramping up, which was a big surprise because they released this iPhone 17 a couple of months back, or a month back. So the S&P 500 is currently not really up by much, but it's up with the gains from Apple and other stock markets like Robinhood. There is also a bit of hope in the U.S. That's why the market is not being too high or reacting badly. It's because the conversation around the government shutdown, there's also hope that this will come to an end and government will continue its work. And this have led to a lot of delays in terms of data coming from the government agencies. When it comes to FTSE, the FTSE index, it's up by 0.25%, and this is mostly attributed to the aerospace industry in the U.S. and luxury stores, which are currently doing well. And when you go to the JSE All-Share, you can see a negative 2.18% drop, and this is coming from the gold prices reduction, and also we've seen a drop in platinum prices by 7%, which was also a big jump. So the JSE All-Share is also currently down because of that effect in the mining sector, which mining stocks are currently down in overall in SA. So that have had that effect. And on top of that, as we earlier alluded to, the meeting for this grey listing issue in SA has led to cautious trading in the market. So people are currently not keen on risky instruments or equity instruments in SA because they are waiting for the outcome from this meeting. And then after, maybe by next week, once we know the outcome, we'll start to see a reaction to that. Otherwise, for the JSE Ultra, it's just those two effects coming into play and affecting the market.
Senator, thank you very much for your insights. That was Sandiswa Dlamini, Treasury Dealer at Nedbank, helping us make sense of what is making the day's trade. Otherwise, this is the part where we wrap up the show. Until next time, thank you so much for your company. Take care.
Make better money choices. Choose a bank that takes your money seriously. Business-wise.